Okay, so good afternoon. Welcome to this webinar jointly organized by the Chinese Business Chamber, JurisTax, and Baker Tilly, which will be about the business impact of the National Budget 2021-2022, which was delivered by the Honorable Dr. 𝐁𝐮𝐬𝐬 Padayachee, Minister of Finance, Economic Planning and Development last Friday. So my name is 𝐁𝐮𝐬𝐬𝐧𝐚𝐿. I am the Secretary of the Chinese Business Chamber, and I will be the moderator for this webinar. So we will have about an hour today to discuss about the fiscal measures of the budget with distinguished guests, which I will now welcome. So we have Mr. Mario Hannelas, Technical Advisor of the Mauritius Revenue Authority, Mr. Mahmad OOZEER, Director of the Operational Services Department of the MRA, Monsieur Bobby Yerkiah, Tax Partner at Baker Tilly, and Ms. Taroonah Doolub, Corporate Lawyer at JurisTax. So welcome to you all.
Yeah, thank you.
So just before starting, I would like to invite the attendees to ask their questions in the Q&A box below. So if you have any questions about the budget or any specific clarification you would like to ask when the speakers are speaking, please feel free to insert your question there. The format of the webinar today will be in the form of Q&A. So please feel free. It's supposed to be like a discussion for a better understanding of the tax measures. So without further ado, I will now leave the floor to Mr. Hannelas for his presentation. Mr. Hannelas.
Thank you. Distinguished members of Chinese Chamber of Commerce, participants, ladies and gentlemen, good afternoon. I'm indeed very pleased to be with you this afternoon on this webinar to talk about the budget measures relating to taxation. I understand that most of you are representatives of the small and medium enterprises, and therefore the few slides that I will be sharing with you will focus on some of the taxation measures which have been announced by the minister to boost the sector. In my slides, I have reproduced what is already in the budget speech or annexed to the budget speech. So I will try to share my okay. Just to mention before I go to some of the slide that there has not been any increase in tax rate. So taxpayers have welcomed the fact that the minister has not increased direct or indirect taxes for the coming year. This, I think, is a good signal to investors, both local and international. Now, at paragraph 256 of the budget speech, we see that there is a 110% deduction on the taxable income, which we allowed on the taxable income for the direct expenditure incurred for the purchase of products manufactured locally by SME. And you will see also that self-employed individuals contributing to Contribution Sociale Généralisée, CSG, will benefit from self-employed assistance scheme. All self-employed individuals must submit an income tax return. And in this context, the MRA will develop a simple tax return whereby a self-employed whose income does not exceed the basic income exemption threshold will be able to declare only an estimate of their income derived during the year. Amendment will be brought to the Income Tax Act to cater for the refund of salary compensation paid to employees of SME for the period January to June 2021, The amendment will be effective from 1st January 2021. The refund will be as follows. For export-oriented enterprise, the maximum amount refunded monthly will be 235 rupees per employee. And for others, it will be 375 per employee. And for others, the period will be extended up to 30th June 2022. However, this assistance is not payable to an SME for a particular month if that SME has benefited from the wage assistance scheme for that month. Manufacturing companies incurring expenditure for market research and product development targeting the African market will be entitled to double tax deduction. I think that this is an encouragement to our local companies to export on the African market. The advance payment system computation will be amended to cater for companies which are subject to corporate tax at a lower rate than 15%. As you know, there are companies which normally they pay tax at 3% because either there's a partial exemption, or export-oriented companies, they pay tax at 3%, less than 15%. Now, similarly, the tax computation, the computation of tax liability of self-employed individual under the CPS, the current payment system, will be amended to cater for those persons who are subject to tax at the lower rate of 10%. And you are aware that those who derive income, monthly income less than 50,000 as the employees, they are not taxable at 15%, but at 10% in personal income tax. On my next slide, you will see that it has been announced that unrelieving investment tax credit of manufacturing company will be able to carry forward for 10 years. This will be clarified in the Income Tax Act. A small enterprise, that is, some years, 2 years back, I think we have introduced a presumptive tax for those who do not keep proper books of accounts and they want to be taxed on a presumptive system of tax of 1%, although this has not been a very, I don't know, they are not really used by many taxpayers. So if, because there is no chargeable income, it has been said that it will be clarified that such an enterprise that opt for 1% presumptive tax will be exempted from CSR obligation, will not have to pay CSR even if they are profitable. And the Income Tax Act will also be amended to ratify the decision for income tax liability for companies under, that is, under APS system. This has been announced, but it will have to be put in the law, in the Income Tax Act, that advance payment system that was due in November 2020 up to May 2021, this has been deferred to 30th June 2021, and also advance payment for personal income tax for self-employed persons under the CPS system. This also has been deferred up to October 2021. That is, this will be at the time of submission of the income tax return. And we see that also it has been mentioned that you are aware that normally a company profitable, they have to have a CSR fund, 2% of their previous chargeable income of previous year, and they have to remit 75%, but 25% they can implement CSR program or finance a NGO in the specified priority areas of intervention. But the priority areas of intervention will be extended to include the restoration of a building designated as a national heritage under the National Heritage Fund Act 2003. Tax arrears payment has been reintroduced. The scheme provides for full waivers of penalties and interest where tax arrears outstanding as at 31st October 2020 under Income Tax, VAT Act, Gambling Regulatory Authority Act, and if they are paid in full by 31st December 2021. Now, provided the taxpayer register under the scheme by 30th June 2021. Now, if taxpayers have their cases pending before the ARC, the Supreme Court, or the Privy Council, and they wish to take advantage of the scheme, they have to withdraw their case and they can take advantage of the scheme. As regard SMEs, the scheme will remain open to them up to end of this year, December 2021. So as we say, as has been announced, it will be an interactive action. So I do not have a lot of slides. So I will stop sharing my slides and the floor back to Kate.
Yes, thank you, Mr. Hannelas. So I have noted in the budget that there would be an amnesty on trade fees and related penalties and interests that were due before the 1st January 2020. Maybe if you could please comment on that, if you have more information or if it's for Mr. OOZEER.
Yeah, I think that I will leave my colleague because he's more concerned with this. Mahmad?
Yeah, in fact, trade fees are not payable to the MRA. Trade fees are payable to the, I think, the Business Registration Department. So this department is going to manage it. We won't be able to give you further information on this because it's being managed by another government department.
Yes, thank you. And we have also noted from your slides, Mr. Hannelas, that there will be 200% deduction applicable to manufacturing companies. So this is effectively to encourage companies to export towards Africa. So maybe if Bobby can comment on that on his side with regard to the practice, in practice, what's the status?
Good afternoon, everyone. So yes, before I answer your question, Kate, it's important to have a look at the definition of manufacturing in the Income Tax Act. So I read it. So manufacturing company means a company which derives at least 75% of its gross income from manufacturing activities in Mauritius, but does not include a company engaged in the manufacture of alcoholic drinks or cigarettes or other tobacco products, or a company engaged in carrying on the business of a restaurant. So manufacture also has been defined in the Income Tax Act. It means the transformation of materials or semi-processed materials into finished or semi-finished goods, and includes the assembly of parts into a piece of machinery or equipment or other product, retreading of used tires, recycling of waste. So to get back to your question, this 200% deduction, so it's welcome within the community, and I think it's a good decision. It's a support, to manufacturing companies. The only question is that it is targeted towards the African market. So maybe from the MRA, if we can have clarity whether this is strictly being applied to the African market, as mentioned in the budget speech, or would it be extended to other markets, in the region or even outside the African region?
Okay, as you can see, this is a policy issue. And I know that the market, our market, Mauritius, is small. And if we want to, the African market is a very big market. And I know that we are part of Africa. And I think that it's a good move because if we can produce and sell on the African market, this will be definitely a plus for Mauritius. And as far as your question is concerned, whether this will be extended, as I said, it's a policy issue. It's a good start if we can have a good market in Africa. It's an encouragement. Okay.
Mr. Hannelas, so we have a question from one of the attendees. So the question is, the deadline of 30th of June 2021 is too short for TAS. Can that date be extended in the finance bill?
Okay, if I can clarify on this, the tax area settlement scheme. In fact, this was implemented somewhere around last year, end of last year, and the deadline for the submission of the application is 30th of June. But for the payment, the deadline is 31st of December. However, in the budget speech, it has been announced that for SMEs, this scheme has been extended up to 31st of December. So the application for SMEs can be made after 30th of June. Now, concerning the deadline for the payment, I know that it's being considered, and we need to wait for the Finance Act. But for the time being, the deadline for payment is 31st of December, and the deadline for application has been extended for SMEs up to 31st of December.
Thank you, Mr. OOZEER. So now we shift to another sector, a very important sector of our economy, the financial services sector. So now we'll invite Ms. Taroonah Doolub to maybe give an overview of the measures which have been proposed to help that sector or boost that sector as well. Thank you.
Kate. Hello, everyone. So as Kate has said, I will be summarizing a bit the measures that have been announced relating to the financial services industry. We all know this is a very much resilient sector, which has managed to make a growth of about 2% since last year to this year, while the other sectors have had, unfortunately, not a good growth rate. So what has been announced in this budget regarding to continue ensuring that this financial services industry continue to grow? First of all, it relates to the efforts that have been made to ensure that Mauritius gets out of the blacklisting of the European Union and the grey listing of the Financial Action Task Force. Since last year, we've been unfortunately put on this blacklist of the EU. And ever since, many changes have been brought to our legislation, including changes in the Gambling Act, the Financial Reporting Act, to impose additional obligations to ensure that a proper due diligence and verification is done whenever we are onboarding clients, whenever non-professionals and business are onboarding clients, including notaries, real estate agents, jewelers. So a lot of changes have been brought in our laws previously since last year. And this year, in the budget, announcements have been made for the institution of a financial crime commission to investigate all the matters relating to the AML, anti-money laundering cases, which was previously said by the European Union but was not present in our regulatory system. We were kind of reproached that our regulatory system did not provide the proper way of conducting investigation into those AML and CFT matters. And it was said to be one of the reasons why we were found, why we were put on this blacklist of EU. So this is the first measure. This is the first measure that we have heard in the budget, which relates to remedying that particular deficiency. There is also the setting up of the Financial Services Division of the Supreme Court and Intermediate Court as well, to be able to hear out the cases relating to AML. So we really see this and I would say this obsession to really get out of this blacklist, because this is hindering the progress of the financial services industry. And we really hope that with these measures, we will manage to get out of this list quite soon. So apart from the AML and CFT laws that I have just spoken about, we also take note that there will be the introduction of an extension of what we call a tax holiday. for fund managers and asset managers. So all those who are working in the financial services industry and who have a certificate of asset manager or fund manager, they will now be able to benefit from a tax holiday which has been extended from 5 years to 10 years. And previously, you would be able to benefit from this tax holiday if you were managing about $100 million. Now this has been reduced, the threshold has been reduced to $50 million. So if you are a fund manager or an asset manager and you are managing $50 million, you can request to get the tax holiday certificate and be able to benefit from it for a 10-year period. The same extension has also been applied to family office licenses. It's a license that we've been hearing about for quite some time now. And there was already the tax holiday being applicable to family office, which was 5 years. Now this has been extended to 10 years, giving further incentives to all those who is interested in getting involved in the provision of family office to take advantage of this new initiative. We have seen other announcement being made as well in relation to those having global business licenses. In respect to ease business, now it has been confirmed in the budget that for all those changes are less than 5% in the shareholding of a global business company, we would not be requiring the Financial Services Commission approval. So this is a measure which we welcome, which is supposed to ease the transactional aspect of the global business sector. So we look forward to it. The third thing I'm going to speak about is a partial exemption on revenue of 80%, which will now be applicable also to investment dealers, which was left out previously from the partial exemption regime. Now investment dealers can benefit from 80%, I would say, exemption on their revenue whenever they will be subject to tax. I think these kind of sum up all those measures that really concern the global business sector, which we are welcoming favorably from a player of the financial industry. So I would be happy to hear any question that you may have on the financial industry. So back to Kate. So if she has other questions.
Yes. So maybe I will leave the floor to Bobby with regard to any comments he would have with regard to the announced measures with regard to financial sector.
Yes, Kate. So I'll comment on the asset manager. So basically, the Income Tax Act provides that this exemption will apply to an employee who manages an asset base not less than 100 million USD. Now it's 50 million USD. Maybe someone from the MRA can clarify when we say the employee. Is it a single employee managing this asset base, or is it the team who is involved to manage this particular asset base?
With the what was announced, sorry. When you read the Bobby, well, your question is whether it's an employee or a team.
Yes, because when we are talking about one employee managing an asset base of 100 million USD, it's quite a huge amount. So let's say you've got someone who applies for this exemption. So what is the what is the position of the authorities? Is it like a single employee, or is it like a batch of employee working on that asset managers? Mario, I guess that you might not be having the answer at hand, but this is a question that is arising when it comes to the management of the asset manager being exempted on this on their emoluments.
Bobby, when it comes to a company, I know that these have been discussed lengthily at the level of the OECD and EU, and they are very strict on the substance requirement and all that. When it's come to an individual, this exemption you are saying it's the individual is eligible to the exemption, or
Yes, yes.
huh?
Yes.
You know, now they are
17.
coming, they have not really addressed the substance requirement for individual. And I won't be able to say anything, this only that, you know, they have started with the companies, and when you give exemption to individual, I know that there were discussions about whether they are going to start looking at individual also, which are given some incentive, tax incentive. Yeah.
Okay, Kate, back to you.
Yes, thank you, Bobby. I think I will address the next question to Mr. Hannelas with regard to the proposed amendment to including local global business companies in regard to arm's length transactions. With regard to transfer pricing. So if we could
I know
get
this
your
is
comments.
This is a section 75 of the Income Tax Act.
Yeah.
You know, paradoxically, if you look at this section, it falls within the international aspect of taxation, and everybody will know that when you talk about international tax, global business companies should be in. The only issue is that there is a problem in the wording. It's talk about business or other income earning activity in Mauritius. So we have had a case recently at the ARC where the particular company holder of a GBC global business license, they were arguing that they were not doing any business in Mauritius, but all their business are being done outside. That is, they are doing business from Mauritius and not in Mauritius. So normally, if a company is in Mauritius and is trying to get any advantage from our any tax incentive, and it should be a Mauritian company. So this announcement by the minister is to clarify on this. That is, even if you do business from Mauritius and you are a Mauritian company, you should be, this section should apply to these companies also. Yeah. It's nearly a question of, presently when you look at the section, it does apply to global business. But we had a particular case where the company successfully demonstrated to the ARC that they were not doing business in Mauritius.
Thank you, Mr. Hannelas. Bobby, do you have any comment?
Yes, so thank you, Mario. When we refer to section 75, indeed, it mentions activity carried on in Mauritius. So it's all a question regarding the drafting of the actual legislation. So basically, if it is mentioned that, you know, this section would apply to global business companies, our point of view is that it might not be relevant in the sense that, as Mario mentioned, the drafting of this particular section is very important, where if it is stated in or from Mauritius, then it might have the impact that it is looking for. Otherwise, if it is just mentioned that it applies to global business company, it might not have the same impact. So now, if we refer to the definition of core income generating activities, it already covers in or from Mauritius. So basically, Mario, would these two particular sections be read together when we are talking arm's length, or is it like an amendment would be brought to the section 75 of the Income Tax Act?
I think that an amendment will be brought because to make assurance doubly sure. And, you know, we have been discussing whether the company, global business companies are doing business in Mauritius. And you rightly pointed out that if in the regulations we say that they have their core income generating activities in Mauritius, I don't see why this section arm's length should not apply to them. So it's only a confirmation, because we are telling the EU, we are telling the OECD that global business companies are Mauritian company, they have substance in Mauritius, they are doing business in Mauritius, so we have to be consistent.
Thank you, Kate. Over to you.
Thank you. So I don't see any questions with regard to financial services. I will remind our attendees to ask their questions in the Q&A box and not in the chat group, so that we can look at the questions and address them to our speakers if they arise. So we will now shift to another measure of the budget, which is the incentive to attract skills, foreign skills and talent to Mauritius. So I will now invite Taroonah to brief us on the various measures that have been announced in the budget in that regard.
So yes, this budget has shown that there is a willingness to attract professionals, to attract foreigners to come and work in Mauritius. There has been a change in respect to the time period of all those having occupation permits. Today, those having occupation permit either as a professional or investor, they would normally have 3 years, but now this has been extended to 10 years. So all those having occupation permit will be able to benefit from this extension from 3 to 10 years. This is the first change relating to this willingness to open our market to foreigners. Second thing, all those having dependents. Earlier on, there was an age limit on the dependents, especially on the children, where they were not able to benefit from the residency permit whenever they exceed the age of 24. This age limit has been removed now, so the children, irrespective of the age, can benefit from the dependent permit to reside in Mauritius. The spouses of all those having the occupation permit will be able to work without the need for them to get a separate occupation permit or work permit. This is something which will be very interesting, because earlier on it was never the case. If someone was coming on an OP, on an occupation permit, and his or her spouse wanted to work, she or he had to apply for a separate work permit. So this is now removed. So it's encouraging for all those coming into the country. There is a new category which has been introduced, calling the family occupation permit, to all those who will be contributing more than $250,000 to the COVID-19 projects. And the EDB, the Economic Development Board, has been a very, I would say, very commercial in their approach by proposing a new service, which is called the conciergerie service, to all the expats coming into Mauritius, so that they feel comfortable, they have an ease to access of information that will be made, that this is the new service that will be available to them to ease their transition period into Mauritius. We were also seeing the removal of specific visa. Earlier on, when you are coming to Mauritius to apply to have an occupation permit, either as an investor or a professional, you were supposed to come on a business visa. This was one of the requirements of the EDB. Today, this has been removed, so it's more flexible. Or you can come on a tourist or business visa. You can still freely apply for the occupation permit without any obstruction there. All these new measures on the occupation permit definitely shows this need for us to attract foreigners into our country, and maybe to attract foreign skills to form our population, our working population as well on specific sectors. Apart from the occupation permit, we also know that since last year, there has been a new addition in terms of the premium visa. This was introduced last year to allow foreigners to come into our country and to stay on a visa of 1 year, which is renewable. And on that visa, the person can stay in Mauritius, but will not be allowed to work within a Mauritian firm. He can work for his firm, for his employer, which is out of Mauritius. And more precision, more clarification has been brought in this budget on how the income of that particular expat, of a foreigner who has come into our country and has been residing on a premium visa. So I know Bobby has his views on the way the income of a holder of premium visa will be taxed. So I will invite him to express his views on here.
Thank you, Taroonah. So basically, if we look at Section 74 of the Income Tax Act, 74(1)(a) mentions that emoluments derived from any office or employment, the duties of which are performed wholly or mainly in Mauritius, whether such emoluments are received in Mauritius or not, could be considered as local source. So basically, when someone is being granted a premium visa, actually, this person is not going to be subject to tax, on such income, even though that person is actually performing his duty, whether wholly or partly in Mauritius. Now, even if that person is making expenditure on credit cards, foreign credit cards, this also will not be considered as being local source. So yes, we welcome, this premium visa, which will attract like foreigners working in Mauritius, but it would be good to have the views of the MRA, whether it is considered to be discriminatory with regards to local people working and the holders of the premium visa.
Bobby, you are right to say that Section 74 tells you that if you work mainly in Mauritius, you perform your duties, the source of income is Mauritius. But here, we are, in fact, what has been announced in the budget is that there will be a derogation for holder of premium visa, in terms that even if they are going to work from Mauritius, in Mauritius, this will be considered as if it's foreign source income, because, for individual, when they derive foreign source income, it's only when they remit it to Mauritius that it is taxable. The thing is, it's an incentive to attract these people in Mauritius, because they are employed by foreigners. And you know that Mauritius, people like to come to Mauritius. And the time we are living in Mauritius now, the world, with the COVID pandemic, many people have started working from home, a new way of working. And some persons professionals will be interested, and high professionals, they will be interested to come and live in Mauritius for some time and work from Mauritius. So there are other countries doing the same, trying to attract those people in their country, because having them in Mauritius would be, they will have to spend some money. You don't look at only the tax aspect. So it will be a good thing if we have a lot of these people coming to Mauritius. And what he is saying is that, let's say we did not have this incentive, they will not have come to Mauritius, will not come to Mauritius. And they are not being paid by Mauritian employers. The employers are abroad, they are working here, and it will only be considered that when they remit the income. So if they don't remit, and you mentioned also about credit card, it has been mentioned in that budget that if their credit card, because now you are in a country, you use your credit card, that these people, they already have money in bank. It's very difficult in practice to ascertain whether it's that particular income come from what source. So it is mentioned that to avoid administrative hurdle, you know, and also it is also mentioned that if somebody, let's say, apart from Visa and credit card, there is remittance of money in Mauritius, and if he declares, naturally we'll have to demonstrate, he declares that on this income, tax has already been paid overseas, then he will not have to pay tax in Mauritius. I think that this is a fundamental, it's an issue where nobody wants to pay, to have double taxation. That is, if you have derived income in another country and you, probably these income are not Mauritian source income, they have been, they have received it from abroad. And even if they are considered as our resident per our domestic law provide that there is a unilateral relief, and we also have double taxation treaty. So I don't think this is really an issue. And you are right to say that there are some derogation from Section 74 in terms of the source of income is in Mauritius, but we are considering as it being foreign source unless they remit it to Mauritius. But I think it's a good measure to attract these people down to Mauritius, and Mauritius will stand to gain from this measure. This is my personal opinion.
Thank you, Mr. Hannelas. So we will stay in the knowledge industry. So this question is with regard to private universities. So the budget, in the budget, it was announced that a provision of a concessional 3% corporate tax rate to private universities set up would be and would apply in Mauritius. So the question is whether this would apply to the existing private universities.
No, this is a policy issue again, and we cannot say for sure. I think I mentioned that will probably the intention is to attract. You remember last year, I think it was announced that there's some incentive to 100 top world universities, and now Mauritius has ambition to become an educational hub, and I think that the government is trying to attract people to set up universities in Mauritius. Your question, I can't really answer because we will have to wait for the finance bill. And there are many universities already in Mauritius. Probably they would like this 3% tax to be extended to them also, but I can't really say what will be the finance bill, whether it will only be applicable to future those that are set up after a certain period. I can't really answer this. Yeah.
Noted, Mr. Hannelas. Bobby, I see you are fidgeting. Do you have any comments on this?
No, I'm agreeable with Mario. So these are technical questions. So basically, why? Maybe the question, why is it applicable to existing universities? Otherwise, this legislation would create two categories of, private universities. That is those who are already in existence and would be taxable at the existing rate, and the new ones being taxable at 3%. So the issues that might arise is that the existing one, if they do not benefit from such an advantage, they might close down, but of course set up under a new name. And this is not an advice, but this is what could happen. But the last thing, I think, my comment on the with regard to private universities, and I guess that Mario might not be having this answer as well. So would these universities be subject to CSR, given that they will be operating on the local market?
You know that Section 50, I think there are certain companies that are outside the scope of CSR, like global business companies. I can't say what will, if they are local companies. Naturally, as the law currently stands, if they are not global business companies, of course, CSR will apply, but unless the government decides otherwise.
Thank you. So I'm looking at the time as well. So we will be shifting now to personal taxation. So I see a lot of questions have been raised with regard to the announcements with regard to construction and real estate. So I see one question from our attendees with regard to the refund of the 5% of the cost of acquisition of a house, apartment, or land to construct a residence up to a maximum of 500,000 rupees, and also the refund of 5% of a home loan up to a maximum of 500,000 rupees. So if either Mr. OOZEER or Mr. Hannelas could clarify a little bit about this measure.
Okay, I can clarify on this. In fact, you know how it works. The minister announces the policy in the budget. Then it goes about making the administrative arrangements. Up to now, we cannot say whether this administrative arrangement will be given to the MRA for processing the application for the refunds, or it will be given to some other government organizations, because you will know that probably anybody who purchases a property will have to pay the registration duties at the Registrar General. It may be that the government decides to give this responsibility to that department or to the MRA. In fact, again, it's a policy decision that the government will make the decision about who will be given that responsibility. And for now, we at the MRA, we cannot give you that answer. Again, I'm sorry, but we are not aware up to now. These arrangements have not yet been finalized.
Okay.
At least at the level of.
Okay. Thank you, Mr. OOZEER. I think that was clear. If we go to another question, so there has been a lot of question with regard to individual pension schemes as well. I don't know if Bobby would like to ask this question, or I will ask, yeah?
Yes, if I can comment on that, okay, thank you. So, yes, this has been announced, so contribution to individual pension schemes. So the questions that has been raised is that would it apply to like foreign pension schemes? Of course, there is no clarity. It's only a policy decision. We do understand. So I think the Ministry of Finance should come up and clarify. Maybe in the finance bill they will announce it. But we suggest that it applies to foreign pension schemes. And then the other question is whether such contribution would also apply to non-resident individuals. Maybe Moyo or Mahmad can reply to this.
If I can clarify on this. Now, the first thing is that there is a deduction which is being granted from gross income for income tax purposes for premiums paid. Now, when we say a personal pension plan, personal pension schemes, it should be a scheme, I think, which is going to be approved by the FSC, because the FSC is the body, Financial Services Commission, is the body who manages the company's license to provide a pension scheme. So probably what's going to happen is that the premiums will be deductible if it's paid to a pension scheme approved by the FSC. So I think that's it from me. If Mario will add something on this.
I don't know what, but one thing is sure, it will apply to pension scheme set up in Mauritius, because Bobby wanted to know whether foreigners, a pension scheme set up abroad. I don't think so, but we'll have to wait for the finance bill. Foreigners, you are saying that whether they will be entitled. I know that we normally cater for, let's say, our taxpayers here in Mauritius, and most of our taxpayers will be given, they are encouraged to save money for their old age if they are self-employed people, and they could have a personal pension plan, and I don't think this is a measure that we have, and any country, no country will make measures for foreigners, no? It's only when it comes to you are taxing their foreign source income, and then naturally we will have to give them some relief in terms of expenditure that they incur. But I don't think that this is a measure for foreigners. It's a measure for our citizen here, for our resident. But we will have to wait for the finance bill.
Yeah. There was another question with regard to real estate. This is with regard to VAT refund, though. So maybe this is a policy decision as well, but the question is, with regard to the VAT refund of 300,000 rupees, the time limit for the construction has not been specified. Would you have any more clarification with regard to that?
Allow me, Kate.
Clarified in the bill when the law is no, Mahmad?
So what I think is going to happen is that this is a VAT refund, so it will occur when the expenditure is incurred. And there is also the question of, I think it was 500,000 has now been reduced to 300,000. And it is already under the VAT Act, and the application for refund is being made to the MRA. And these real estates will have probably to apply to the MRA. But yes, as you rightly said, the period of construction has not been clarified. This probably will be clarified in the Finance Act, because in the budget speech, it's only the main lines of the outline, the policy, and then all these policies are implemented in the Finance Act, where all the details are given there. So back to you.
Yes, thank you. Another query on this is whether this is the VAT refund would also apply to commercial buildings or land on BP.
Yeah, I think we don't have clarity on this for the time being, because as I said, the policy is announced in the budget speech, and then it is fine-tuned and implemented through the Finance Act. So to get the details, we will need to wait for the Finance Act in order to understand the mechanism and all the conditions applicable.
Noted. Thank you, Mr. OOZEER. So I will move to the next question. So with regard to the time limit to issue rulings, one of the questions is, so with regard to the time limit of 30 days for MRA to issue a tax ruling, this shall run as from the date additional information sought by the MRA is received from the applicant. Does this tax ruling pertain to assessment made at the level of the audit and OADR level of the MRA?
the tax ruling, normally it's an issue, you know. If a case is already, let's say there's an assessment, a decision has been taken. So for a tax ruling, it's an issue where they have doubt and they ask for a tax ruling. Why this provision to extend this? It's 30 days, section 159 mentions 30 days after the application. But you will see that in section 159, it is said that the application should be in writing and shall include full details of the transaction relating to the income together with all documents relevant to the transaction, specified precisely the question as to which the ruling is required, give a full statement setting out the opinion of that person as to the application of this act. So sometime in practice, because I am a member of the tax ruling committee as well as Mr. OOZEER, we receive ruling which are not, where all information has not been given, and where we have to engage with the applicant, where we have to ask for additional information, because the ruling we have, it's binding on MRA. It's not binding on the applicant, it's binding on MRA. And it has an implication. We are interpreting the Income Tax Act, the VAT Act. So we need to be sure when we give a ruling, and if the applicant has not given all the details, before being in a position to give the ruling, we must have all the facts. So sometimes it takes time. And you know, in practice, in other countries, when we look at ruling, they ask for one ruling. Here in Mauritius, the applicant, those applying for ruling, they are used to ask in one application, they ask for 4, 5, 10 rulings. And sometimes we have to look, we don't refuse to give the ruling, but we need all information before giving the ruling. I think the time given 30 days after having requested, let's say, Director General, MRA, has asked for additional information because we must have all the facts. And the delay starts running as from the time you have given all the information. This is the proposal to amend the section 159.
Yeah. Thank you, Mr. Hannelas. So I move on to the next question. This is with regard to time-barred assessment. So with the new budget, the MRA will now have wider powers to raise time-barred assessments. So there will be no need to go to the independent tax panel. Would you have any comments with regard to that?
You know, this has been introduced some time back. In any country, you don't normally, I think, now that we have clearly set out in the MRA Act that whenever an assessment is being raised, we have to justify the assessment, give full reasons for the reasons for making the assessment, the basis and all that. Here we are talking about fraud cases or where somebody has not submitted a return. Naturally, when it's becoming very time-consuming, like bureaucracy. If you have to go in every case, you have to go before the independent tax panel. And it's sure that if somebody has not submitted a return, or if somebody has, let's say it's a fraudulent return, the independent tax panel will give us the leave to make the assessment, will give us the permission to make the assessment. But it's an unnecessary hurdle, because what happened is that if we have a case where somebody has not furnished a return but is a taxpayer, or if it is a fraudulent, let's say it's a fraud, in case of fraud, so we have to, the onus will be on the MRA to give the basis to justify the assessment. And then if it is said that the right of objection and the right of appeal will still be there. If the taxpayer still feel aggrieved by the decision of the MRA, they will be able to object, and then eventually to go to the ARC or to the even to the Supreme Court, or their right of objection and appeal remains there.
Mm-hmm. So maybe if we can get Bobby's comments from the other side.
Yes, pleasure. I just want to mention that I'm not part of the Avengers team, so I won't be acting as the Avengers here. But the issue remains that, you know, the fraud itself has not been defined, you know, properly. I mean, it has not been defined. So the issue might be that there is this hurdle was important for taxpayers, because if we can compare it, and Mario might be aware of this, in India, for example, when we refer to anti-avoidance assessments, that is assessments relating to anti-avoidance cases, so it goes through a panel before the authorities can raise assessment. So the issue here is that with so wide powers, I don't want to use like words like abuse, but when we are talking about fraud, it is very, very important to make sure that these are genuine cases and assessment are not raised based like on a best of judgment. It should be, for example, like police giving a report. I don't know how this works, but previously you will recall, Mario, that the wrongful, I think there was something on like wrongful declaration, something, and willful neglect, excuse me, willful neglect, but it has been removed. Now you've got fraud and non-submission of return. Whilst for non-submission of return, I think taxpayers would like, between inverted commas, agree, but for fraud, it's something which is very, very like sensitive, you know, to look after. Now, you mentioned also that all the rights of taxpayers are still there when it comes to objection, appeal to the ARC, Supreme Court, and ultimately to the Privy Council. But unfortunately, it takes very, very long, and it's very tedious and costly, you know, for taxpayers to go through this process and you know, have justice done. So the question again is to apply this piece of legislation when it comes to fraud. It should be made in a very, very prudent manner.
Bobby, I understand your point, but I see you are here to defend the taxpayers, but you should realize that in Mauritius, there is no possibility now to make blind assessment. And I can tell you that we are one of the rare countries in the world where it is a requirement for somebody to make an assessment before MRA make an assessment. It has to give the reasons, the basis, and the assessment order must be a speaking order. And you won't see this. I went to Singapore on mission. I was asking them whether they have similar provisions in their law. No, they don't have. Many countries don't have this. So I can give you, it's an assurance. The taxpayers now have an assurance that no longer MRA will not be able. You speak of power. Every country, when it comes to fraud, when it comes to fraudulent returns, and you know, when there is a fraud, the onus will be on the MRA to firstly prove, to establish that there has been fraud cases. It's not an easy, you know, it's not an easy matter. I don't see any officer of the MRA trying to make an assessment on a fraud case if he has not got a strong arguments. So you can rest assured that there will not be any abuse of this authority, because the law itself, the provisions of the MRA Act, give the guarantee that assessment, to make an assessment, you must justify you give the reason, the basis, and all that.
Thank you, Mr. Hannelas, for this clarification. I will maybe have two more questions. So this question maybe will be addressed to Mr. OOZEER. So we have a couple of our members who have complained with regard to the response time for the wage assistance scheme. So it would appear that they have had a delay in the payment of the wage assistance scheme for the months of February and March. Maybe if Mr. OOZEER could maybe give us some clarity or the process with regard to the process of the wage assistance scheme, or maybe a contact person or contact details where they can follow up their application. Thank you.
Just to clarify on this, I think we have carried out our own analysis internally because we want to know whether there's really a delay. So just to tell you, we have paid approximately nearly 17,000 employers since we introduced the scheme. So it is, I've got the figure here, 16,972 employers concerning 278,000 employees for a total amount of approximately 16 billion rupees. Of course, all the payments have not been done within, let's say, 1 week, but our analysis showed that the majority of payments have been done within a very short delay. Within 1 week, we have paid the majority. But of course, there are some cases that requires further analysis, because we very often, when we look at why somebody has not received his payments, I mean an employer, it's probably because the return, the CSG return, the contribution return has not been submitted, or some other reasons. Maybe the bank account number contains some errors. So each time we have had the valid reasons for which the payments have not been made. Yes, sometimes it takes a bit slightly longer. Why? Because since June up to February June 2020 up to February 2021, we have paid wage assistance scheme to operators of the tourism industry. Now, operators of the tourism industry, let's say like a hotel which is licensed by the tourism authority or some other activity that are licensed, these are paid outright. But there are some activities where it is related to tourism. The company, the employer doesn't have a license, but the employer carries out his business, which is dependent on the tourism. So there is a verifications that need to be done between the turnover of the company for the current month and the turnover of the company for the previous year. That's why sometimes it takes a bit longer, and very often it's because, I would say very often, it's because the employer has not given the correct information. But I can give you the assurance that we do our best, because the majority of employers are paid within, let's say, 1 week or 10 days. Now, if you want, I can give you an email address, the head office at 𝐁𝐮𝐬𝐬, where we have our staff who deals with these types of emails in priority. I can also give you an assurance that we have got a dedicated unit now that deals with the self-employed assistance scheme, and a separate unit dealing with the wage assistance scheme. So we have got teams working, and even during the lockdown period, these persons have been working from home, accessing all the system and making the payments, you would say, very quickly, we can say. But of course, I admit that there may be some cases. In these cases, just send us an email on head office at 𝐁𝐻, and we'll do our best to effect the payment as soon as possible.
Thank you, Mr. OOZEER. I think I take this opportunity to thank the MRA for the tremendous job and the good job that they've been doing since the first lockdown, with all this additional work on the staff. So if I can move on to maybe, so I said 2 last questions, maybe 1 more question, which is in relation to the CSG. So the question is, can we have some additional details with regard to escalating CSG costs?
Okay, so in fact, I mean, the cost to the employer, this is an element that has been, I think, largely commented last year on the introduction of CSG. And the figures that have been communicated, the analysis that have been done, is that in more than 80% cases, employers would pay less. And in more than, again, 80% cases, employees will pay less, because just before talking about the cost to employers, you will see that the majority of employers have got their employees earning less than 39,800 rupees of basic salary per month. So everywhere where the employee earns a basic salary lower than 39,800, both the employer and the employee would pay less, which means that the employer would have his wages bill reduced. It's only for approximately 20% of employers that the wage bill will be higher. And you will note that the profile of the employers are the employers which gives professional services, and very often these employers, these companies are companies that are profitable. So this is the analysis that was made last year, and up to this year, I think the rates has remained the same and nothing has changed. But as announced by the minister in the budget speech, there is a CSG bill which is in preparation, and that will also cater for the benefits in that bill.
Thank you, Mr. OOZEER. So I have some other questions, but I'm not sure if this panel will be able to answer them. So one is with regard to space international contacts with Mauritius Corporate Space Land Africa. So I'm not sure if the panelists will be able to reply to that. Any details on how the 800 million rupees expenses announced by the Minister on Solid Waste Management will be spent? I think the panelists will not be able to answer that as well. With regard to JWAS, what about employer being paid GWAS for April and March, but not for January and February?
I can reply to this one. January and February are the months where we didn't, I mean, 2021, we didn't have a lockdown in Mauritius. So economic activities were on, except for the tourism industry and for activities related to the tourism. So for these sectors, the wage assistance scheme has been paid and disbursed for the month of January and February. When it comes to March, we went into lockdown on the 10th of March. So for the operators of the tourism industry and the related activities, they have been paid wage assistance scheme for the full month. But for all the remaining employers, it has been paid for half a month. And then it continued for the month of April and for the month of May as well, again, depending on the activity that have been carried out. For the month of April, it was for the small and medium enterprises. And for the month of May, it is for the tourism industry associated or employers engage in activities related to the tourism industry, as well as employers for the self-employed assistance scheme. It has been given to those who reside or operate their business in the red zone. So for the month of May, it has been extended for the red zone. And for the month of June as well, we have just published the communication on our website. It has been approved again for the tourism industry and for the persons, the self-employed operating in the red zone. And the minister has now announced that this will be extended for the 3 coming months, July, August, and September at least. And it's going to apply to the SMEs operating in these areas.
Okay, noted. Thank you, Mr. OOZEER. So I think we've reached our time limit for this webinar today. Maybe I will leave the floor with 1 minute with each speaker giving a final remark for the end. But I suppose that, you know, it has been a very, very informative session with questions from our attendees, and a lot of the questions will also be addressed, I suppose, in the in the upcoming finance bill. So maybe Taroonah, if we can start with you with your closing remarks before we end this session.
Yes, so thank you, Kate. Thank you, everyone, for answering the questions from the audience. So like it has been rightly pointed out that the budget speech is an announcement of the measures. It's not the law, and we need to wait for the Finance Act to come out to really know to what extent those measures will become applicable. So I would just ask them to be patient. Certain questions cannot be answered today, and we'll be able to do that only when the law comes out. So thank you so much for attending this webinar. If you've got any question, you can still send it to Kate, and we'll share with you the contact details of the panelists so that you can send your questions and we'll try to answer to them.
Okay, thank you, Taroonah. Bobby?
So no further comment. I would like to thank you all for attending. Thank you very much.
Wait, Mr. OOZEER?
Okay, I think I would thank the Chamber for organizing it, because I mean, it gives the opportunity for attendees to get clarification on the budget measures. And also, of course, thanking the attendees for investing their time in this webinar. Thank you.
Thank you, Mr. OOZEER. Mr. Hannelas?
I would like, as my colleague, to thank the Chamber, the Chinese Chamber of Commerce. It's a pleasure every year. I've been coming in person when you organize it. And it's a pleasure because it gives us the opportunity to explain to you, and we will always be available even after the finance bill is enacted for the Finance Act. So feel free to ask us. We'll come and we'll be happy to be on in this event again.
Thank you very much, Mr. Hannelas and Mr. OOZEER. Indeed, we have been hosting, I think, a yearly talk with the MRA after the budget, and it's always a pleasure to have you give us clarifications on these measures. This is very much appreciated. So thank you all. Thank you all the panelists, Taroonah, Bobby, and all the attendees to attend this webinar today. So thank you all. Keep well and keep safe. Thank you.
Bye.
Bye.
Bye.